Happy Sunday, SMS Street Traders. We have a little present for you called the VIX Volatility Index, called the Fear Indicator. You have learned a lot about it so far, and what we're going to be taking a look at here just very quickly is that we're going to be taking a look at the complete October strike prices here. And then we're going to look at the November, the 11/17 strike prices there. The reason why we're looking at the 1020s to start with, MMTs, is because if the movement is going to go in our way, then we just trade that in the short term, and then we can buy this longer term one at the same time. So you all understand, buying calls and puts on the VIX. So our open interest table is here. We're going to go over that as to who thinks what in the broader market. First of all, I'm going to have to show you the weekly chart. The Nasdaq 100 Volatility Index is related to the lower chart that I've already done, which equals a Nasdaq 100. That's this right here. That's these two charts right here. Okay? And basically, MMTs are going to get ready to make a stock move based on directional movement of the U.S. equity markets. And it's also a good way that people have to pay up to hedge a portfolio that SMF MMTs also learn how to do. Is once again, the SMF system will break those mathematical equations down for them very precisely as to how and where and when and at what price to develop these positions in the VIX, the VXN and the VIX. Right now, VXN is the one that we're looking at. So as we have broke higher, and I'm going to show this to you now, when we sold off really good in the markets, this came all the way down and we put in that. We broke out high. Oh boy, did we ever. And then look what happened to the stock market. It went straight down to these bottoms. When we finally made that bottom here on the Nasdaq 100 SMF MMTs, that's when the volatility started to have its reversal here, and as it went down, this went higher. We had a 4-week breakout at a failure bar, SMF failure bar right there, half bar failure, bam. But notice that as we rallied here, we rallied down. That's how it works. Then we had that 3-week August pullback here, and then we had a double week breakout to these double tops right there. And I am going to draw a trend line, MMTs, because the reason why was that was a double wick sell. That meant that when this indicator could not break out on its second pass, that is where we started setting up the bottom and for this rally to take place. Because the rally started here when we started with that gap down, and you can see that it's been coming all the way down, and that reversal high here, this reversal high here, right here is that support level. Right there is that support level. Now, let's be key Pacific. MMTs, this is a top one, top number 2, and this would apply, MMTs, on any time frame. When you went down, the 4-week September rally went straight up. And basically, when you're using various instruments that are weighted specifically to key price action movement, whether it's long or short, MMTs, is the important thing that you understand is where these reversals are going to be and why this chart is so important to you. Because when you couldn't break those double tops, you started setting up that rally. And you slid right off of that top, and you slid right up here in the September rally. And we all know that when this is going weak, it is time to be buying equities on breakouts and call options and everything that's moving in that directional movement. That directional movement that way says I buy for the breakout. Now MMTs, we've already done and gone through the Nasdaq 100 chart. I don't need to go through that again. And we did the monthly one. So you want to tie the call and put options to your weekly and monthly charts that we did MMTs, so that you in the next video can start these call and put options, so that when we break, if we were to break out higher here, if this sets up and holds that support level, MMTs, and we break higher, that means we're going to pull back here. But you got to remember that the 4-week breakout is very strong with the 10-week crossover. So these are going to be what we call range bound trades. They're going to be very key specific in price action for the MMT profits structure in these trades. So basically, we're going to do that here next. And I'm going to go through another complete video with these calls and these puts and the open interest and what that is all about, and how you can read a market and knowing where the crowd is by understanding the majority of the volume of people participating. If they're getting too long and top ended, that means we're going to have a correction coming, because once they're all in, there isn't anywhere to go anymore. You can't keep going higher, you got to come down. And basically, if we do have a reversal in the earnings season, then the VIX would be very attractive on these calls, because when that VIX does the thing, meaning that when it breaks higher, boy, you can make a lot of money in the 2250 put strategy and a 2250 call strategy and all of these other strategies right here. Right here. These are the strike prices. 20, 22s, 22s, 25, 30s, 30 up and out of the money, some in the money, some at the money. Here, we're going to load another one here at a $30 call for November. And there. And let's save that, page save. So this is what we're going to be looking at. We're going to be looking at all scenarios, all mathematical trading equations. By the way, once again, I'm going to conclude the monthly chart or weekly chart. Here's that weekly resistance on the Nasdaq 100. We could pull back here in the Nasdaq 100. Here's half of that breakout bar. That's that first support level at 1906. If we break that, then it's down at the 3-week breakout bottom right around 1575, 1600, somewhere in there. I'm not looking at the SMF platform. I'm using the standard app here, so it doesn't equate it for me. It does. I will give you those numbers, but here they are. If I break here, that's support 1, support 2. That's based on the SMF weekly breakout bar. If we start to consolidate, what that means is that the Nasdaq 100 is getting top heavy. If it consolidates, doesn't break down, and starts to break higher, you will not break through that resistance line.